I think all of us as grad students uh, have spent a lot of time sitting down thinking about Becker tomes and things like that, where we learned a lot about, a model with one parent, one child. And to me, at some level, I think the key thing that I've taken away from this conference is that we need to move beyond just thinking about one parent, one child, that we need to think about full family resources and how husbands and wives, or perhaps the absence thereof, go on to create opportunities for their children. But in terms of what I thought we could do just for a few minutes was to think about, more precisely what sorts of key lessons that we've learned from the talks today. So I don't know if any of the today's speakers would like to jump in by sort of synthesizing a few of the findings that they've seen, and then maybe we could have a few people from the audience come in to think a little bit more about some of the issues that were raised today, whether it be the role of fragile families and what this means about gender differences, for example, or any other issues that that perhaps we've learned today. Do we have any takers? All right.
I can kick things off though. I guess maybe just to sort of reiterate in a nutshell what I thought I was saying around into the conversation, and then pick up from what Eric was saying. So I think but as Eric was noting, traditional social mobility, intergenerational mobility literature focus on sort of particular type of family, and then as Jim was saying, on income and often income at one point in time. I guess part of what motivated the work that I was looking at was the fact that in the UK, wealth has become much larger compared to income, and I think there's a lot of focus on what that has meant for how inequality is passed down across generations. And that was kind of one of the things that came out of the Deason review that I was part of at the IFS, was that, for a long time, people were talking about how income inequality was very stable. Intergenerational mobility shows, in income, shows lots of different patterns, but in a way that was kind of missing a key dimension of inequality, which was a shift towards the form of wealth and family wealth, and therefore sort of a new set of mechanisms whereby inequality was passed down through direct wealth transfers and the way they interact across the labor force. And I guess one thing that I took away from today was need to think more about what different family structures might mean for that. So just the fact that if you have one parent, very simple point, and one income, then they're not going to be able to accumulate wealth as quickly as two, arguably, if they're both two are in work. And I think also, I guess, the way that family dissolution might directly affect family wealth, or at least how much of it can be passed down. And these are things that probably others have thought about, but I think should think more about after today's sessions. Let's go. Should I pass it to someone or pass it back to you?
Maybe to the audience.
Yeah, and do we have any questions from the audience? Yes.
I have to say, for myself, I've been really encouraged to hear the degree of academic analysis and research that there is, it's really vibrant. You get that from all of your talks. And I'm so grateful to you for explaining that in every way. And it shows that there's a lot of thinking going on about the way things work between generations. I think, there are two aspects of this conference. One is intergenerational and the other is rebalancing. Now, I know that rebalancing within a family means going from, the parents and the grandparents and the children, what you're going to do with so on. But rebalancing for me means as well that we have an intense polarization of wealth. I will talk about this when I actually kick things off tomorrow morning. And that's not just within this country and within the United States, it's also across the world. We have an intense global polarization of wealth. And the intergenerational rebalancing that I'm looking for is one which actually takes a little bit of that huge amount of wealth which is left by the old fogies dropping off our perch. And yeah, I know I'm not probably not halfway to myself. But actually, actually sees that flowing into, the young people from very low income backgrounds, disadvantaged areas, not just in the first world, but in the global world. And I want to see a lot of that happen too. We'll talk quite a lot about that tomorrow, but I would be hugely encouraged if we could hear from the academics such as yourselves, how you can explain, how we can analyze and make this happen. So we don't just have to rely on UBS and Credit Suisse in order to do the analysis behind this. We can see what the academic answers are. That's the challenge.
Oh, can I ask a question of you again? Of you, oh. I was worried by the emphasis on wealth. Being housing wealth. It goes back to the kind of I think very valid criticism of Piketty book. When he was talking about the growth of wealth. But when you look at the growth of wealth, most of the growth of wealth was housing. Housing stopped, right? It wasn't this wasn't some fortune of Elon Musk making $1 trillion salary. There's people making money that way. But I do worry that somehow the notion that much of the wealth that we heard about, I believe, is housing. And the housing, the fact that we have housing and the fact that housing is in the form of wealth as a result of, I think, very good policies, developed credit markets, and a reward to individuals who had higher earnings. I think the question becomes, how is it we get the mechanism that makes it possible to acquire that housing? So I would worry about, wealth strikes me as it's a very abstract issue. It's a very highly political issue too, since we have this group of rentiers, flipping coupons off their bonds and living off that and oppressing the masses. But a lot of these people are middle-class people who bought a house and so forth. Now, some of the people didn't participate in it. And that's, I think, more the question, why we didn't build up that housing stock in that direction. But I'm a little bit worried about the equation here of discussion of wealth, when the wealth is mostly housing stock. Is it a bad thing to have a large housing stock for some people? And then to have appreciation. And then some of that's due to government policies, clearly, right? The way the housing stocks are treated, the write-offs, the tax policy, and so forth. That's a totally different perspective than a redistributive notion about trickling down the wealth to a certain set of individuals. So I would open that to discussion. I don't, maybe Ron disagree with me. I would call on Richard.
I follow up a little bit, but the others should speak. I had a similar reaction in a way. It's why we're really caring about any of this. And one of it was wealth. So I thought, why do I care about it? And in the end, it's a matter of fairness and things. But let me go straight for misallocation. And just misallocation in a way that creates disadvantage. Misallocation in the sense that if you corrected disadvantage, you get a more productive outcome. So I'm an economist looking for good outcomes. And I think the housing one, I like, what's come out of David and others' work is that because of the spatial effect of house prices, it really reduces mobility of people. So it itself can create a lower social mobility if you need some credit to move. And that if in some areas that credits come from possibly luck, high house prices somewhere but low others, because house prices are a spatial thing, it means that any high ability person who could have been highly social mobile now has no credit to get out of that place. So that when I think of housing, I think of it really, does it hold up someone realizing their potential, which is what I think of as good social mobility. And I think in the UK it does, it may do in other places because housing is extremely important on two things. One is education in mobility, not education so much, but your ability to move to a thriving area. The other area that's particularly important is nearly all startup innovations outside London, at least, are completely based on people's housing value. So it's kind of become quite critical in the ability of people to fund new ideas. Surprisingly, but I learned this. And so I think deep down, not that housing can have quite an important impact in this kind of misallocation and therefore not achieving potential. And in a way, that's the kind of thing I worry about more.
But could I ask a question? I mean, I've been, I remember seeing England many years ago, when there was this discussion of the privatization of council housing.
Yeah.
And the argument that was made there was that people were stuck in council housing
Yeah.
because the rents were so low. And if we privatized, we'd create much more social mobility. Two questions. One, did that happen? And secondly, did the council housing people get a big capital gain? With some of the people who are now owning housing and viewed in this favorable group, was this a consequence of a policy that redistributed to the poorer members of who were in the council, or did they end up worse off? I don't know.
Sure. Yeah, I mean, both those things. And I go back to the cluster effect. You know, in London, that initial privatization, for good or for bad, however you think about it, did have an enormous uplifting effect on those that got that wealth.
Right, and that's some of the wealth that now is captured.
But if you think about, but if you take an area that's depressed and hasn't, you're still in the same. Now you just translated low rent into low capital, and it doesn't help social mobility in a poor cluster area. It clearly did to some extent, at least for the generation that got hit by it, increase social mobility for that group.
And their
I think
wealth.
it's interesting question. I should.
But it increased housing wealth too, right? And this was because it was essentially a transfer from the government
Sure.
to the individuals, and that ended private wealth balance, so.
Yeah.
I disagree.
Because it's a question.
Yes, yeah, so you've been waiting patiently, yes.
On some of the studies economics at Cambridge in the late sixties. At a time when the economic trials included sociology and political science. And I feel that the problem is, I've gone on to become a medical sociologist, cognitive scientist, and end up interested in understanding decision making under uncertainty with a theory about the way narratives operate in economics or potentially can to solve or unsolved coordination problems. Now, it seems to me that if you look at this in a more cross-disciplinary way, what we're discussing, it is established within sociology that there hasn't been relatively any intergenerational social mobility in either the United States or the UK. This is quite clear in the work of John Goldthorpe, sociologist who King's main answer, and talking economics pipeline. So there's no relative social mobility because essentially what happened, there was an expansion of positions, but the people who already had advantage have held on to it. So I think the findings of the last talk of Jim Heckman are extremely relevant because families do successfully ensure, on the whole, that people hang on to the advantage they've got. Now, the more interesting problem, I think, is spatial inequality, which was just discussed. And this is, in my view, essentially an agglomeration problem. That is that here in the UK, and it's much worse in the UK, I think, than in the US. Partly because we don't have, as in the US, devolved political authority. In the US, you have the states, and the different states are to an extent able to experiment with different ways of doing things. Whereas here in the UK, we have the most centralized political set up in the OECD. So that basically outside London in the southeast, we have a really serious problem, which is also causing a serious political problem for us. Because actually, that is the problem of revolt, which we're currently suffering. So I think if we're talking about trying to get intergenerational transfer, probably spatial inequality is, first of all, it's something where there's a fair degree of consensus according to opinion polling that people do think is unfair. Whereas people are much less, I think, convinced that it's unfair that some people have more money than others because maybe some people have done better things than others and so on. But spatially, people are fairly convinced that's unfair. And so there's grounds for doing something about it. And there, I don't think that can be relied on economics alone, because in economic theory, this shouldn't be happening. Essentially, if you've got low wage areas, investment should be going in there, etc., etc. Well, it isn't. And so that, I think, is a core problem, which is inhibiting this intergenerational transfer.
Yeah, that's great. Certainly, there's been lots of research, I think, done in different parts of this building in terms of trying to think about all these issues about leveling up and how do we bring up certain parts of Britain that are less advantaged. So I don't know if anyone would like to contribute to that in terms of thinking about, for example, the role of, I guess, regional inequality in terms of what that has done for intergenerational mobility. I guess that's one way to sum up a lot of what you're getting.
But what policy specifically follows from Goldthorpe's findings, this regional inequality? I mean, are you suggesting moving people to new neighborhoods or?
Well, so I mean, the underlying problem is that in a perfectly performing economy, according to standard assumption, people just move to London.
Sure,
But they don't, and they don't want to. And so the underlying problem is that there is a vast dependency to the way that development occurs in different places, and the market does not and cannot solve it. So I mean, Bert and I work with this Paul Collier, who's at Oxford University, and our view is that, for example, so the house prices in London have gone up, and I personally have benefited from them, but through nothing that I personally did. It's just because I happen to live in London. This is why it's an agglomeration problem. Now, if there had been a way of taxing the gains as they were occurring and redistributing them back to the different parts of the country, so that there wasn't an advantage here, that would be one, kind of way of trying to address it. But the bigger issue is, how do you get investment, how do you get the private sector to collaborate with the public sector in these places? And it has been done in the United States, for example, in Pittsburgh. Pittsburgh is an example of a place that was exactly like Sheffield, a steel town or city that fell apart, but which through a combination of private sector activity and local government leadership was completely changed. There are other places in the world. Another one is Newcastle, New South Wales. But these are not places which were solved by the market. The market left them alone. But neither are they solved by government handouts. So one of the interesting things about South Yorkshire, they've had a succession of very successful politicians being there. And when they were in government, they got large transfers into Sheffield, which actually, as far as we can see from the statistics, made things worse.
Yeah,
Eric, can I just come back for a moment on these things?
yes.
Yeah, thanks. Yeah, I would say, it's not transferring law, it's not actually just a matter of taking the pilot, right, and spreading it over the line we're in. It's a much deeper process now. I mean, you take any year, well, it's houses going up last year, there's tech companies being worth absolute trillions, whether it's gold price going up, there's masses of ways in which assets go up in value. But what we've heard today from a number of different speakers among you is about, it's not just a matter of the asset transfer, but it's a transfer of the life skills and the training and everything which goes with that. We'll talk a bit more about that tomorrow. That program up there, which says Step Plus, is what we do for young people in care in this country, use incentivized learning. And it's a long process, and we learned about that. I'll talk a little bit more about it in the morning. We learned about that from Mohammed Yunus in microfinance, why he uses loans rather than grants, because it's a learning process. And you've got to make that learning process work with it, otherwise what you do is just distribute and then just things concentrate again. You know, you've got to empower people from disadvantaged, low income happenings, and the two have got to go together. That's right, just make up.
But that's very different from housing policy. I mean, you know, you're suggesting basic skill enhancement. And I fully agree. I think most would agree. So nobody's questioning that, right? But that, isn't that a matter of focus? How are you gonna create that kind of opportunity? And that's what's missing in the discussion, right? If I started 13, why not started 3 months or something? Seriously, we're talking, some of the data today really talked about the transfers at different ages already. And we saw there were some real life cycle effects. I don't think we have full knowledge of that, but I think we have some hints those things are important. So that's why I'm a little bit, I realize we have to start somewhere and there are only places to start, but I'm not sure how answering your question. You're not focusing more on building those skills. Those basic, we have the whole dynamics of skill formation, starting from the
But
earliest.
you've all spoken about transferring those skills within the family. You've spoken about it. Eileen's spoken.
Right.
Everyone's, you know, spoken about it.
Yeah, so what other thing? I mean, isn't that a good thing?
Yeah, it's great, but why can't we have, and make that happen on a totally widespread, even global basis? So we really.
Well, if we forget about global, even within a local basis, a lot of variation among families, right? Some kids are gonna have, you know, the term is accident of birth, right? And that's really the issue, right? A lot of heterogeneity in parenting and parenting styles. Just that alone, right?
And yes, I agree, and I think the role of heterogeneity in parenting styles and thinking about these issues that presumably inequality at some level is derived from altruistic behavior. It truly creates some of the tension that we've really been talking about today. I'd also like to say, I thought, Gavin, yours was kind of a great motivational speech to get us all pumped up to have a beer. At which bar and where hopefully we can discuss more all the issues that we talked about today. So David has told us that the finest bar that's within walking distance, which I know is on our sheet, is the Smuggler's Tavern. So just in terms of what we'll do, so the Smuggler's Tavern, I think it's basically a 3-minute walk from here, right?
I think so.
Yeah, so we're just going to walk over and we can continue the discussion there. How about that?